Hello and welcome to our virtual roundtable event on outsourced trading. My name is Dan Morgan, and I'm responsible for the global securities trading business and currency management businesses here at State Street, and I'll be your moderator for today's event. Now, outsourced trading has received its fair share of attention and coverage in the past 12 to 18 months in the business, while existing in various forms for the better part of the last 20 years, has most recently been gaining momentum as more and more asset owners and asset managers examine the current state of their operating model and look for efficiencies wherever they can find them. Today, we will examine different facets of the outsourced trading business with the help of our assembled panel of experts from across the globe and through our back and forth conversation. Now, joining me today on our panel are three individuals who each respectively touch outsourced trading space from different angles. First, I'll introduce Shane Swanson, who is a senior analyst and head of the equities practice, market structure and technology from Greenwich Associates, who's a leading global provider of data, analytics, and insight to the financial services industry. He's an equities and financial technology expert in the firm's market structure and technology practice and has over 20 years of industry experience. Thanks, Shane, for lending us your time today.
Thank you for having me.
Excellent. Next, we have Ryan Akey, who's global head of Aon's operational risk solution and analytics for Aon Hewitt, a global investment consulting firm to asset owners and asset managers. Since joining the firm in 2015, Ryan's responsible for developing and implementing operational risk identification and reduction strategies across Aon's global client portfolios, which have exposure to thousands of investment managers globally. And across all asset classes. Welcome, Ryan, and thank you.
Thank you.
And finally, joining us from the UK is Jason Moorhead, partner, UK Asset and Wealth Management, consulting lead, and global digital transformation lead for PwC, a global leader in the consultancy space. Jason leads PwC's asset and wealth management operations and technology consulting practice, and primarily works with the asset and wealth management clients on key strategic and operational transformational programs. Currently, he's leading a team responsible for implementing one of the first State Street Charles River Alpha implementations. We thank Jason for that here at State Street. Jason's resume consists of projects that include design, build, implementation of architecture that house some of the largest global private and public asset vehicles. Thank you, Jason, for joining us so late in your afternoon. So after those introductions, let's get to it. I'll ask the first question. Now, outsourced trading can mean many things to many people, depending on who you ask. I'll start across the pond with Jason and ask how he would define outsourced trading to kick off our conversation.
Thanks, Dan. So, as you said, outsourced trading does have different connotations. I work with some clients for whom they're asset owners and they are looking for somebody to take away what is a non-core part of their business. Multiple examples of that, particularly within the pension fund industry. And if I look within Europe, most recently, the local government pension scheme activities in the UK saw a significant amount of that taking place. I think there's then asset managers who realise that there's a particular asset class or particular market that for themselves they either the cost or just the skill base isn't there, and that might be exposure to foreign markets, or it might be something like LDI and liability driven investments. So they're looking for somebody to take a specific problem. I think the most recent and certainly where I'm seeing the most activity is in the outsourcing of trade execution, where as a number of managers start to look at what is a core activity for them, they are starting to see opportunities within the front office, and that's one of the areas that they're increasingly looking to. So depending on who you're talking to, from my experience, there's quite a gamut there that it covers.
I would have to agree. I think it's in the eye of the beholder to some extent. There is that spectrum of definitions. It can really be anything from, it's a simple execution relationship you have, almost like a traditional broker, all the way to being a full enterprise relationship where your entire front to back office has been outsourced to a firm, fully integrated with your OMS, EMS, PMS systems, It can be something where you're looking at, as a firm, a need to beef up your business continuity. We've seen throughout the last year that there have been some exogenous events which have strained our systems throughout the industry. And so having a trusted provider that is there to take on some of that burden can certainly be a function of an outsourced trading relationship. As Jason said, you may have a segment of your needs. International trading is a big one we see in our research, where firms just may not be as competent or comfortable with the regulations that are part and parcel of that area. So rather than build out your own effort there, you can rely on a trusted partner to actually encompass that for you. So again, we could go on, but I see it as that broad spectrum, kind of from a very simple relationship to a very complex one.
Yeah, I mean, I don't think I'm going to argue with any of that, right? And from our vantage point, we're starting to see it a little bit more. I think from our perspective, in diligencing investment managers, typically we're seeing, the trend of smaller managers where there may be more resource constraints. There may be issues ultimately with segregation of duties capabilities just based on having a small headcount. They may not have kind of the volumes that require a dedicated trading desk. And so a lot of times when we see outsourced trading implemented, it is either on an opportunistic basis for a larger organization, or for a smaller group, it may be more holistic. And again, it's typically those smaller groups that are looking to, optimize resources a little bit more, find ways to, think about it not just as cost savings, but a risk management element, an improvement as well.
Thanks, Ryan. I'll stick with you. You represent a firm that performs diligence on investment managers, and their outsourced vendors, in the context of making recommendations and assessments by your consulting staff. Has your manager due diligence process changed as of late to take into account the increased outsourced front office functions, such as execution?
Yeah, so I don't think the process really changes, right? It's more of an adaptation of what we're doing. The move toward more and more outsourcing, again, I think it started probably with more of the support functions, things like IT, compliance, and then it moved into probably back office and some middle office. I think probably we've seen more movement from an outsourcing perspective in the back office side over the last 5 to 10 years. And now it's migrating into the front office. So, I think it's really just part of that overall trend. Where it hits us, of course, is, kind of how do we think about the risk transfer that's going on there? Typically, in a lot of cases, we'd like it because, as I mentioned, a lot of times it is solving for concerns about segregation of duties, concerns about the kind of robustness of the governance structures and the capabilities of a smaller firm. And so outsourcing it to a large institution very often can solve for some of those. What you're looking for then is, okay, where and how does the risk shift? Because obviously you have, and you introduce additional kind of concerns in an outsourcing relationship related to the handoffs, related to what happens when something does go wrong. So, there's always a trade-off. I think on a net basis, very often, that's part of our assessment, right? Is what's the net effect? And it can't be just about saving money for the manager. Probably can't be just about saving money for the portfolio, whether it's a commingled fund or what have you. I think there has to be a net improvement in the operations, or at least a neutral kind of outcome there for us to be in a position to get on board with it. I think, the other kind of last comment I would make is in regard to the outsourcing movement as a trend, not just with front office activities like trading, but across the board. We do see some latency in terms of how investment managers handle their overall vendor selection and monitoring processes. This is one of the areas that I think historically is a lot of times considered and thought of as a lower risk area. But the more your outsourcing functions the more important it is, right? So understanding, why did you select one provider instead of another? What were the inputs? And again, it can't, obviously cost is a big driver for a lot of these things, but it can't just be that. We're looking for evidence that there was, thoughtful consideration. We're looking for credible policies and procedures that are guiding not just your selection of that provider, but how are you monitoring them on a go-forward basis to make sure that the market's not moving on you, to make sure that your service levels and your kind of KPIs and things like that are being kind of met. So again, we're not just looking for like this, full outsourcing and then kind of wash your hands of any worry or responsibility. Again, I think governance a lot of times in an institution, the focus is really on kind of the control, but there's a little bit less focus on expertise, right? So I'll translate that to the tech side. We see a lot of groups that fully outsource their IT provider, and then they allocate the oversight or the day-to-day kind of interaction with that kind of IT vendor with somebody who has no background or experience in IT sometimes, right? So now you're in a position where that IT vendor could tell you anything, and you would really have kind of limited ability to assess and understand whether or not they're steering you on the right path or not. So I think trading would be, again, it's certainly an area if you're looking at outsourcing. How are you overseeing that, not just from, the standpoint of general management, general good governance, but do you have the expertise internally to, again, manage outcomes there and understand some of the nuance that's going on in a relatively sophisticated kind of outsourcing framework?
Ryan, I think you made an incredibly important point, which was you have to establish on the front end, what is the relationship? What are you going to monitor? What are you going to manage? How are you going to document it? And then who's responsible for review and what steps will be taken afterwards. So I joke around about this. I have a regulatory and legal background. I'm a recovering lawyer, but you always have to kind of say, you're going to tell them what you're going to do. You have to do it. You have to prove that you did it. And then you have to document that you prove that you did it. And it sounds excessive, except that's exactly what you have to do. And you have to be thoughtful about it on the front end while you're doing it and in the review process and how you've documented it. And so if you don't set it up correctly as you go into the relationship and you're kind of doing it on the back end at the last, late, as you'd said, if you kind of make this an afterthought, you've already lost. It's already, you're at it, in a very, very poor position. So you really do have to do this on the front end thoughtfully so that you have the opportunity to do it and do it well. And then you may have to make some changes depending on what those results are.
And it's an interesting fine line, because I think if you look at the first generation of sort of outsourcing, there was a criticism that a lot of people in-house were just redoing what the outsourcer had done, and it got a really bad name. So it's a real sort of fine art to make sure what you're doing is you're doing appropriate due diligence and checks on what has been done, but not redoing what has been done. And that's always an interesting challenge. And as outsourcing moves and becomes more prevalent within the front office, it's going to become a bigger challenge, I would say.
Turning to Shane quickly, I know your firm provides valuable research on the state of the industry and frequently polls the community around the topic. Can you comment on what your latest research has shown in terms of how the asset management and the asset owner community is viewing outsourced trading?
Absolutely. So, the last couple of years, we've interviewed nearly 200 asset owners, asset managers, ranging kind of in AUMs from under 5 billion to over 50 billion. So pretty large swath of the community. And, we've asked some pretty broad questions around outsourced trading, really kind of getting, just some trending on what is the view, how do you look at outsourced trading in general? And just what we thought were some interesting both findings and changes over even 2019 to 2020. When you ask, what are your views of outsourced trading as they apply to, does it only apply to small or new funds? That has shrunk rather massively from 2019 to 2020. It was 45% thought it was only smaller new funds were good fits for outsourced trading to 29% in 2020. And when we look at this in 2021, we expect that might even go down more. The other was we asked if it was a good fit for buy-side firms to help manage their volume and seek best execution. That actually grew a good bit from 20% in 2019 to 32% in 2020. So those two trends make sense to us, as outsourced trading becomes more well understood in the community. Obviously, last year was enormous for growth of this as everybody's systems were just stressed to the limit, and outsourced trading was a natural fit for it. The one finding in both years, which to us we're somewhat befuddled by, but I guess this will always be there, 10%, around 10% both years, responded that they were unaware of outsourced trading, that they did not know what it was. So within that large subset of managers, and this was not limited to just small managers, although it was not, we did not see it as much in the larger managers, unaware of outsourced trading as a potential for them. So I guess that's good for those who are providing outsourced trading. There's an untapped resource out there.
Yeah, I think it's a double-edged sword, and I think it really tells the industry that the education component of the product, of the service, is certainly not over. Jason, very quickly, you represent a large firm that advises asset managers on how they run their firms, or how they can run their firms more efficiently. Can you comment on what's occurred with your client base in the last 12 to 18 months, and what questions they're asking you around this particular facet of outsourcing?
Yes, certainly. So I think, as you said, efficiency is one angle, and certainly for most asset owners or asset managers looking for a particular exposure, I think that is the least important element. But I think there started to be a conversation around trade execution over the last few years, and that hasn't just been about outsourcing. It started with people recognizing it wasn't necessarily a core competency. You saw a lot of large managers not outsource it, but they started to group it together in a location that wasn't London, New York, all the major expensive financial centers. You've started to see a number of managers, particularly with passive funds, look to automate orders fundamentally off the back of money coming in. And so that's changed the mindset. And 5-10 years ago, it was hard enough to get people bought into middle office outsourcing. But if you said you were going to touch something in the front office and you were going to outsource it, I think there would have been a lot of people who would have told you were mad. I think what's happened is those views of what is a core competency, I think it's helped that certainly in Europe, the MiFID regulations around best execution, there's been a few instances where people have actually not been able to prove best execution in the way that they would have hoped they could. And so as people start to change their thinking about whether or not trade execution is a core activity for them or not, they then start to look at options and opportunities for, well, do we centralize it? Do we do it in a low-cost location? Or actually, are we better off handing this to somebody who can do it on our behalf because it doesn't offer us a competitive advantage? And that's really where the conversations are. And I think over the last 12 months, people are still coming through that acceptance of outsourcing execution. And I tend to find it's the acceptance of it is a lot more prevalent at people who are kind of looking at their front to back operating model anyway, and are possibly going through a middle office outsourcing, and they look to see what else they might want to do up and down the value chain.
What I've seen across the industry, even in the organizational structure of how firms are set up, whereas traditionally the execution or dealing desk may have gone up through the CIO chain, I've seen some instances, and many at that, where that function actually goes up through the COO chain now, which is a little bit of a sort of a dramatic shift in thinking.
We do see that as well from time to time, and we do typically get the explanation that kind of that flow trading sensibility is really an operational function to some extent. My biggest concern with that construct is what happens when there's a problem, what happens when there's an error, because now you have somebody in that COO chair And that's again a classic kind of segregation of duties conundrum. You have somebody under him who's made a mistake, even if it's an honest one. The first check to that mistake should be operations, right? And that potentially is now sitting under the same person, right? So they're both going to go to the same person as the kind of initial kind of escalation of a problem. Right. So it's less about the kind of functional idea of where should this sit within an organization, and we would view it more from a segregation problem. Now, I'm going to add another wrinkle to that as a follow-on to some of the earlier comments. Typically, we're seeing probably, you're more likely going to see smaller firms that are outsourcing trading. And a lot of times you've already got that COO with a dual role. He's also the chief compliance officer because they don't have room for a dedicated one. So now you have one person, right? And if we think of operations as the first check to the front office, the first check to a trading error, compliance then is that kind of third function. So we're looking at, again, generally three functions within an investment management firm: the risk-taking side of the front office. You've got your initial check, which is operations, your other support functions, and then you have your control functions. So now you have the potential ability of one person who's got oversight of all three of those functional areas of the firm. That's a problem. We would be highly critical of that from a segregation of duties, from a governance structure standpoint, even if it's just flow trading, even if it's just execution. And that's because, again, the 99 point whatever percent of times when there's not a problem, there's not going to be a problem. The 1% of times where something needs to escalate, and now you've got one person with a massive potential conflict of interest. So I just wanted to kind of throw that out there from, again, probably a little bit of a different perspective. Again, we're looking at controls, and controls aren't built to be efficient.
And I suppose that, it's an interesting viewpoint, and I can absolutely understand, and I fully concur with the view that often the efficiency isn't the best way to do things, but I think it's one of those ones where you'd have to go through the specific scenario to understand. But I suppose I kind of see, certainly the operations area, if you're using that as anything other than a checkpoint for fat-fingered errors, it's not a pre or post-trade compliance check. It's not I think there's questions around what your kind of risk and compliance functions are doing in that scenario as well. But I appreciate you might not want all of the activity going through one specific individual.
Switching gears a little bit to one of my next questions is, what do you feel are the most important considerations when looking for the right partner for outsourcing, particularly on the execution side? Why don't we start with Shane?
Sure. So that's such a broad question, right? So when you start thinking through the laundry list of what you have to examine, you mentioned execution. So first of all, you have to know what are your needs, right? You have to do this is a full-on vendor analysis, right? It's an outsourced vendor, so you have to go through an outsourced vendor check. But if you're thinking particularly around trading and executions, you have to understand exactly what reports you're going to be getting, what the timing of that is going to be, how you're going to measure it, what your feedback loop mechanism is going to be. What is the attention you're going to receive in a crisis? What are the dedicated resources you have in those, crisis scenarios?
I'll interject just for 1 second, just on a point you brought up, just in terms of coverage, right? If you're outsourcing, you expect that you'll have, better coverage, particularly if you're a small manager, because you're leveraging the size and scale of that outsourced provider. And it's interesting, I think the small to medium-sized investment management community went through this with the sell side, particularly post-crisis, when they were concerned about, profitable clients versus unprofitable clients. And, many of the bulge really put their focus on, the largest and potentially more complex asset managers that were better revenue opportunities for them. And where did that leave the void? That left the void in small to medium-sized managers. So you certainly don't want a repeat of something like that. that makes sense.
Yep, absolutely.
I thought Shane's comment about what happens in a duress situation, what happens when things aren't going right, when there is a crisis. And I thought that was really interesting because you can think of it a couple of different ways. One way is a local or individual specific crisis to your firm. Another is a broader crisis, right? Something going on in the markets where it's not just your firm, but the dozens of other firms and clients. And where are you in the pecking order in terms of how you're going to get supported? How are you going to be in a position to manage through that in a much more kind of competitive environment, right? And I think probably it's natural for somebody in my seat to go, to go to that and find that kind of a very interesting thought, because so much of what we're dealing with is that kind of asymmetric outcome profile, right? We're not worried about, again, efficiencies. We're not worried about when things are going well. We're worried about when things go wrong or go really, really wrong.
And I think the nice blend of that is if you start from where Jason was with this is a partnership, right? You have to go in with the idea that we're working together, we're trying to make each other succeed. And then because I'm a lawyer recovering, I always have to think, what is the failure scenario and how do we protect both of ourselves in the event something does break down? And that's where you have to get into what are your cyber policies? What is the business continuity? How do we make sure data privacy protections are ensured on both ends? I mean, there's, again, the laundry list of everything you have to manage, but I like the mindset of we're going in as partners, but we're protecting ourselves in the event of failure on the back end.
Certainly, and I think as the industry matures, and you could comment on this, the hiring of a provider is less, sort of bilateral at this point, and it's moving towards the sort of traditional outsourced provider RFP process, and I think that certainly helps the industry. Just in terms of, being able to, have those answers to all sorts of questions that, the three of you have brought up in terms of governance, infrastructure, capabilities, so on and so forth, and, be able to have succinct and acceptable answers, quite frankly, to their buy-side partner. From a follow-up perspective, I'd like to talk about sort of comparing and contrasting models, because the vendors in the space range from large and small organizations. Some are custodians, some are asset managers themselves that are essentially lending out their services to other partners. Some are small to medium-sized investment banks that have prime brokerage operations, and some are really specialist providers that have grown up, and that is their reason to be. They are only an outsourced trading provider. So I'd like to just go around the table and get your thoughts on how you think about these vast differing business models and how you make sense of it all. I don't know, Ryan, do you want to start that one?
I would think that typically, again, looking at our client base, by and large, highly institutional, expecting kind of all of the bells and whistles that go with an institutional profile. I think certainly the bulge bracket groups are going to carry a lot more of that as just kind of a standard part of their offering. Whereas, a small group that's maybe more opportunistic and has the ability to potentially even be a better provider, but doesn't have, I don't know, a SOC 1, or doesn't have, credible cybersecurity policies and procedures, or doesn't have some of the other things that you would anticipate, in a larger kind of institutional setting. There's going to be a trade-off there, right, between, again, kind of being nimble and adept and being well controlled, at least, from an institutional perspective.
Great, thanks, Ryan. Shane or Jason, any reaction to that?
Sure, I'll jump in. I tend to I'll echo a little bit of what Ryan said, but again, when you think about what are your needs, right? What are you looking at? So if this was a firm that is looking to expand internationally and it wants to get a foothold there and has no international experience whatsoever, who are you going to look for? Really, then what you're looking for initially is expertise. And the most important thing there is the expertise. So yes, process. Yes, you have to have the fundamentals, but you're looking for that trading expertise and in that jurisdiction that you can tap into and seamlessness, right? Can they handle everything else that you need to have process wise? But you're really looking for that expertise of trading. So what's your focus? Is it that expertise of trading? Or are you, I'm a new fund and I'm turning over everything, right? I want you to be my desk. I'm looking for, more to Ryan's point, the whole shebang. So I really do. I want everything handled and I want, somebody with SOC 1. I want everything out there. I'm not going to, I obviously have to do my vendor work, but, I'm turning it over, lock, stock, and barrel, and I'm going to do the review process on my end, but everything is outsourced. Those are very different views in my mind of what you're looking for, right? One's more laser focused, one's much broader based. And so, the spectrum of providers are out there, that you can pick and choose from that.
Yeah, I think expertise is a good point to bring up. And just in terms of, you spend a lot of time in U.S. equity market structure. That's a full-time job. That's a full-time job for a desk to keep track of order types and venues, exchanges, dark pools, so on and so forth. And thinking about, going global, now you have, depending on, how many countries you want to own, 10, 20, 30, 40 different market structure regimes to keep track of. And it can be overwhelming to ensure that you have that knowledge, and that's certainly a great place for an outsourced provider to start. I think the industry overall has been a beneficiary from a talent perspective. And really over the last 5 to 7 years, we've seen, and you can disagree with me, but I think it's correct. We've seen the basically the shrinkage of the buy side trading desk, and that's due to a host of structural factors. The electronification in general of trading across asset classes has necessitated less headcount, to look after those asset classes. So, and in general, a lower amount of turnover, particularly in the age where we had, global coordinated quantitative easing and, sort of one-way trading. That really took a chunk out of market volumes. Now, that certainly reversed itself considerably starting last March during COVID, and we saw a spike in volumes and volatility. But I think the industry in general has been a recipient of that, really good talent that has buy-side experience that has been sort of structurally displaced, due to the things that I just mentioned. Now, Ryan, you foreshadowed one of my questions in terms of ancillary services. I'd like to get the group's opinion as you think about, services surrounding trade execution, and which, if any, do you feel are the most important for firms to have the ability to offer as part of their package or their suite of solutions? I'll start with, why don't we start with Jason?
I suppose when I look at this again, and again, cognizant I don't want to give a wishy-washy answer, but some of this is again the basis and the reason and rationale for why they're outsourced trading. We started, it's quite a broad spectrum, and so therefore, what people are looking for will differ significantly. For people who are looking on more of the efficiency end, I think it's probably that front to back capability and provision ultimately. And normally I find that the conversations about outsourcing trading come off the back of those other activities actively being looked to be outsourced. So I think that is then quite important. I think if I look at the specifics around, around the trading side, as I said, from a European perspective, I think best execution, from the MiFID regulations and also some of the regulatory pre and post trade transparency and reporting around that have become quite problematic. And so I think that there is an element of, certainly a lot of the reporting around the outside is important for those individuals. I think as you kind of then look more broadly, this is when it becomes a lot more opaque in terms of what people are after. So, I work with a large manager that sort of onboarded an 80 billion mandate from another asset manager recently. And if I look at what was driving that, it was back to that strategic partnership longer term. Money wasn't a factor. It wasn't about a specific capability today. It was more about the exposure it would give them in the future and the ability to build out. And that was the reality of it. So again, from my perspective, it really is on a case by case basis. So apologies, slightly wishy-washy.
No issue at all. Thank you for that, Jason. Shane, any thoughts?
Well, again, I'm an equity guy, so I probably always start from a best execution perspective. So what do your TCA reports look like? What are your daily reports look like, really? And the advances that we've seen on the ability to do execution analysis, whether, and again, you can get very sophisticated these days in terms of, pre-trade, what are my pre-trade analytics? What are my post-trade? What were the outliers? And how frequently that gets provided. So if, again, from a very, detailed perspective of the actual executions that you're receiving, that would be a huge focus for me. Now, again, that's easier in equities. Like you look at something like FX, which I'm not as familiar with, but I know enough about to be dangerous. It's not quite so easy, right? It's very challenging to provide the same level of transparency and data there to even do solid TCA, but there are some methodologies that you can do. So you want to start seeing what do they provide if you're doing that type of asset class as well. So again, suite of what do they provide in a suite of best execution analytics. And then depending on the firm itself, do they do soft dollars in the US? Is that something that they need management help with? When they're doing their trading, is it going to be attributed? Is it going to be anonymous? Does the firm provide for that if it's something they want? Those are very detailed, intricate trading level questions that I think you're going to have to know and get into the weeds with any of your potential partners.
Switching gears and moving on to our last sort of broad-based theme, talking about the future of the industry and the future of outsourced trading. I mentioned before in my opening remarks that the business is maturing, but in my opinion, I don't think it is mature by any means. I guess I'd like to ask the group, how big can this get, do you think? And, approximately how long will it take? Looking over the next 3 to 5 years, how quickly do you see the industry moving toward maturity, coming off the last year where everything, no matter what industry we were in response to COVID, seemed to be, advancing at a much quicker pace, right? Industries that thought they were going to be here, particularly with online activity, industries that were going to be here in 5 years, ended up accelerating, and they're almost there already. So I'll leave it at that and ask Shane, I guess, first to respond.
Great. I think it is actually very much an accelerant from COVID in an odd way. So firms realize that, one, they could work with some level, if not 100% remote. That drove everybody to utilize cloud-based technologies. It did drive, Ryan, I'm sure, has had a lot of work around governance and maintenance around ensuring that all of the remote aspects of that were handled appropriately. But with that comes this realization that, there are service providers that handle this, excess type of capacity, right? They have it and they can provide it to us across a wide swath of our operations. So as that happens, I think it is a natural movement that you think, okay, what other parts of our operations can we move into these areas that other firms can handle for us? And quite bluntly, this is a natural area to look at when you're thinking, okay, if there, if a firm has the either excess capacity and is offering it as a service, or they provide this natively because that's what they've always done. Now we know that we've been able to do this in other areas. Can we do it in trading as well? And so I agree. I think it's a growth area. I think it's been accelerating. I think this puts a bit of gasoline on that fire, and it grows even more rapidly over the next 3 to 5 years. I think we'll see it expand. Again, you said it started in equities. It's definitely been growing in other asset classes, and it's going to expand more rapidly in those in the U.S. And of course, if we started with, I believe international from the U.S. has always been a big footprint for outsourced trading, and there's no reason to expect that will do anything but grow as well.
Thanks, Shane. Ryan, what's your opinion on this?
It gains traction and grows. I think you're always going to have, again, probably certain types of portfolio managers or asset management groups where this is not going to be a fit. To me, it's a little bit maybe of an alpha beta divide there. Again, flow trading versus kind of the prop trading mentality there. So I think, again, the growth will be on the beta side, clearly in my estimation. And again, I think part of it will link to not just the trading components, but what is the reaction time to new regulations? How quickly can these providers onboard, downstream capabilities that accommodate those adjustments? And if they can find a way to be able to nimbly adapt, and when a new regulation or requirement comes out, to be able to accommodate that in a brief period of time, using their scale, using their expertise, that I think will be something that is going to be a really great selling point. If they can respond even quicker than the managers would be able to themselves to those additional burdens, I think that's going to certainly add a lot of gravitas to the offerings.
Thanks, Ryan. Jason, reaction?
Yeah, again, viewing this from a UK European perspective, I think the market for kind of what I call outsourced specialisms, whether that be LDIs in pensions or exposure to a particular market by asset managers, I would say is I don't see that's necessarily going to get more or less. I think particularly in LDIs there's a degree of maturity. I think they're starting to see a shift certainly in the asset owner and the wealth space. Certainly a number of wealth managers in the past offered fund-to-fund structures. Quite a few of them now are realizing they want something a bit more bespoke and a bit more tailored that their clients can buy into. And so I'm starting to see movement within that area where they're then outsourcing the actual management of the assets within the fund. I think the area, as I touched on again, it's that efficiency play of people looking at trade execution. For me, that's the one where I think from a European and UK perspective, you'll see the most movement in the foreseeable future. But equally, I think as per the comments earlier, there is an education process to go through, and I think you're probably looking at that 5-year period for people to get comfortable with the concept of, and because this is aimed at asset managers who are quite mature and they see it as a business, for them to start to shift that mindset to trade execution probably isn't core for our business. And I think that's where that mindset shift will take a little bit longer, but I think eventually it will become as common as middle office outsourcing is today.
Well, it looks like we've reached the end of our session. I think it's been a very productive and diverse, spirited conversation. I'd like to thank our panelists, Shane Swanson, Ryan Akey, and Jason Moorhead for lending us a great deal of time today for this discussion. And it sounds like the industry as a whole is going to be talking about this for quite some time. So thanks everyone for viewing. For more information on State Street's products, please visit www.statestreet.com. and have a great day.